So, Larry, this has been a tumultuous week, I think it's fair to say. Every day we've seen the video of demonstrations and, yes, riots and, yes, looting across the country in response to that tragic incident in Minneapolis. At the same time, the equity markets just kept climbing higher and higher and higher. Why don't the markets pay any attention to the evening news?
Look, it's as extraordinary a week as I've ever seen. Someone said that we're living through the 1918 pandemic, the 1929 economic collapse, the 1968 civil unrest across America, and the Andrew Jackson presidency all at once. I haven't seen anything like it. And before we talk about markets, I think we have to acknowledge that the racial injustice that has been pointed up by the dramatic events now almost 2 weeks old is something that our country's been wrestling with for a long time and is going to be wrestling with for a very long time to come. What happened on the streets of Minneapolis just can't keep happening, and there's just been a huge outpouring of anger and upset. And a critical question for our democracy is going to be whether all of that anguish and anger is channeled constructively into positive change, or doesn't bring about that kind of progress, in which case the cleavages in our society are only going to get worse. The market really doesn't seem like a very big thing relative to all of that. The market's job is to make a judgment about the profits that companies will earn, and in a proximate sense, as cosmically important as these events are, they probably don't change what those earnings are going to be over some interval. But I would caution that over long time periods, this kind of thing makes a very big difference. If you think back, the country almost unraveled in the late 1960s because of cleavages associated with the Vietnam War, because of strife over issues of racial justice. And not immediately, if you look at what happened to the level of stock prices relative to other prices, the real S&P 500, it had its worst long decade in the last 6 or 7 decades, in the decade that followed what happened in 1968. You saw a huge drop into 1974-5 with the Watergate episode, the oil shocks, all of that. And then you saw a further very steep decline into 1982. And so how America deals with all of this is going to be profoundly important, I believe, for America's health. And I don't think America's corporations can be healthy if America is not healthy. And I think enlightened business leaders have recognized that. You've seen many, many CEOs making that point this week. Right. So the markets are optimistic, and I hope the markets are right in their optimism about COVID. I hope the markets are right in their optimism about the society coming together. I'm not sure they are right. It seems to me there's a lot of optimism right now, and I worry that people who were very nervous 2 months ago are fearful of missing out. And it's that kind of FOMO that may be driving a fair amount of this market strength. If you think about almost all financial error, David, It comes from people doing today what they wish they had done yesterday. And everybody who is too scared to buy at the end of March regrets it. And there are a lot of people who think they're rectifying that error by buying now, and maybe they'll turn out to be right. But I'm not sure that's something that we can entirely count on. I think we've got a long way to go with respect to COVID, and an even longer way to go with respect to having a unified and, in a profound sense, functional society living to its potential.
So, Larry, if you want to talk about people being right and wrong, take a look at the people who were estimating the jobs numbers this week. They were wildly wrong by 10 million jobs. I mean, they thought they were going to lose 7.5 million in the United States. We actually gained 2.5 million. What do you make of that? How could that have happened? What does that tell us about where we're headed?
Look, it should give us, all of us who are involved in economic forecasting, a very great sense of humility. And obviously, it's a welcome development for 10 million American families and for America more generally. But I think it would be a mistake to overinterpret. We knew that the whole country was locked down in mid-April, late April, or even early May, in a way that was not going to be sustained. And so we knew that there was going to be a bounce back. We knew that businesses that employ millions of people had received grants, basically, but in order for those grants to be grants without an obligation to pay back, they had to rehire a large number of employees. So when I thought about these numbers as I did through the day, I asked myself, how much of this changed my view about where the economy would be at the end of the year? And how much of this, what represented an earlier bounce back from the floor than most people had expected? And I think it's more earlier bounce than it is stronger and bigger bounce. So it's certainly good news. But when the president starts talking about how it's going to be faster than a V and the economy is going to be a rocket ship and all of that, maybe no one can know for sure. But the fundamental constraints on the economy, some sectors aren't going to be able to come back as long as COVID is pervasive. There's a risk of a second wave of COVID. There's substantial financial overexposure and leverage, and especially in the real estate sector where tenants aren't paying and landlords aren't in positions to pay mortgages, and that's putting strain on the financial system. Those problems aren't resolved, and they're not really closer to being resolved because we got a good employment report today. So yes, faster bounce, but I'm not sure the ultimate place we get is going to be very different.
And finally, Larry, we need to spend 1 minute here at the end to connect those 2 points up, which is the striking thing to me of these numbers was the unemployment for Black Americans actually went up as it went down for both whites and Hispanics. What causes that?
It's the old adage, David, I suspect, last hired, first fired. And in this case, it's first fired, last hired. And that's what we're seeing. I don't know whether we can reach a firm interpretation on the basis of 1 month's numbers, but God knows it's not right that African Americans are doing as much delivering as they're doing and as little being delivered to as is taking place. And that's got something to do with the patterns that we are seeing, and we're going to need to do something about that, and we're going to need to address these questions of inclusion if we're going to have the kind of economy that we all want.